What is up, Nomad Nation? It's been a few days since I made a video. I actually have a little bit of a nation now. There's a few subscribers, got over 1,000 views on this YouTube channel. That's awesome. I appreciate every one of them, and thank you guys so much for joining the Nomad Nation. That's awesome. Anyway, I don't have anything specific planned to talk about today. Hopefully this video finds you all well and your families are well and everybody's sheltering in place like I am and safe from the coronavirus. I'm just going to kind of talk about my story and I think what's a normal story for most people that find their way into trading. I'm going to talk about how I got into trading and my 3-year journey to where I'm at now, going on 4 years, and also what I think a lot of people, the pitfalls that a lot of people run into whenever they're learning how to trade the stock market themselves. I think my story is pretty typical from what I've talked to a lot of traders, successful and some that are not, obviously. I think over 90% of traders fail and lose money in the stock market. So the odds are not in anybody's favor to be successful, but I'm going to try to talk about some of the things that I ran into and things that I think most traders run into and the reason why 90% of people fail. So without further ado, I'm going to jump into that. I'm going to also be showing some live examples of the market and what's going on right now and why stocks kind of move the way they do. I've said before, I don't think there's any secret to trading. The secret to trading would be studying and hard work in the beginning. So basically, learning everything you can learn from YouTube videos like this one. There's thousands of YouTube videos, tons of classes and chat rooms and things you can join. And I don't necessarily think that most of those are bad. Like I've joined chat rooms, I've paid for subscription services to things, and I don't know that I would trade any of it really. I can't point to anything that I've done that I would say was terrible, that this service was terrible or that subscription service was terrible or that I didn't take something away from this or that chat room. So I wouldn't necessarily point people away from those things because I think that I learned something personally from each avenue I went down. I would say, number one, the first thing you need to do if you're going to learn to trade is soak up as much information as possible. I would say that would be step one. If you're just kind of dabbling in, the idea of trading, I would say step one would be to start researching it. I'm really big into research. People that know me on a personal level know that I love researching, and when I get something that I'm passionate about or I'm excited about, I can't help but just start reading about it and watching videos about it, and I really dive into it because I'm so intrigued by it. And that's how I was with trading, and I think that you have to have that level of interest. If you can't sit there and watch, hundreds of hours of YouTube videos, if not thousands, and soak up everything you can, Googling things and trying to piece together exactly how to trade. If that doesn't excite you and you can't sit there and do that, or listening to trading podcasts and none of that really interests you, and you find yourself forcing yourself to listen to those things or watch those things, then I would say trading is not for you, because if you're at that point in the beginning, it's definitely not going to get better because trading is very difficult. There's going to be a lot of downside, negative things that happen in your trading journey. So if you're not super interested in it, I would suggest getting out of this video right now and finding something that you are passionate about. For me, trading has always been the pinnacle of what I want to do with my time, because I've done things like learned how to build websites. I found that very difficult and I wasn't really passionate about it. So that was something I had to force myself to do. I flipped a house bought a house cheap, completely redid it from top to bottom, and then sold it. And I made money on it. I made about $27,000 on it. That was pretty cool. It was decent money, but it was so much work. And then let's see, what else have I done? I tried affiliate marketing, which is where every time somebody clicks on your link and then buys something, you get paid a percentage for them buying that. I did that, but it just felt like I was spamming everybody. I didn't have much success with it and felt like I was spamming a lot of people. Tried to learn SEO and do search engine optimization and SEO, and that was okay, but I wasn't passionate about it. So really, for me, I've always wanted to own my own business and be my own boss, and I've also talked with a lot of investors. I've gone and looked at different businesses to buy. But ultimately, what it really came down to, I loved playing poker online. And to me, that was, something I just was passionate about. I loved doing. I loved playing poker, and playing poker online was awesome. I would say I was probably somewhat addicted to it. I would stay up, until 2 o'clock in the morning when I had to get up for work at 5 a.m., things like that. I just loved it. I looked forward, after work, I looked forward to going and trading. And my ex-wife would tell you that at the time when we first started dating, that was all I wanted to do. I was just obsessed with poker. I wanted to do it all the time, 24 hours a day. I was thinking about poker and my edge and how to do that. So then the U.S. banned poker for real money in the U.S., and that put, the kibosh on that. I could no longer do that. So it wasn't long after that I found day trading, and it was because I was looking for something with that adrenaline rush, but on, the chance to make money. That's what I loved about poker. I could do it from my office or my bed or anywhere, just sit there with a laptop and play poker, and I loved doing it. I loved the thrill of it, the adrenaline of it, the unknown, the gambling side of it, but also you could make money with it. And there was times where I won tournaments and made $1,000, couple $1,000, and so that's what you're really playing for. And the stock market appealed to me, as it does a lot of poker players, because it's basically the same thing. You're learning a skill and an edge to succeed in something that is essentially, it is a game, and it is gambling to some extent, but you can learn your edge and you can learn how to read the market, and then it's not so much gambling, if that makes sense. Kind of like people that learn how to count cards in the casinos. It's you get that edge and you're a little bit more likely to win. So is it really just gambling? No, you're not just flipping a coin, because you have a set of skills that allow you to be successful where others are not. And that's the way that trading is. Trading is, over 90% of traders lose money, but that's also because over 90% of traders are not willing to spend years learning how to hone that craft and learning how to actually trade and read the markets. And I speak from experience, because it wasn't until really just these last few months that I got to a point where I've started being consistent. I haven't made a lot of money with it, but I've got to a point where I'm not losing, thousands and thousands of dollars, and it's not the roller coaster of win a day, lose a day, win a day, lose a day. Consecutively, now I can, string together a week of winners and then maybe a losing day and another week of winners and a losing day. And, it took me 3 years to get to this point. So I've taken some huge losses and some, I don't know. I've had some pretty big gains, but my biggest loss is definitely larger than my biggest gain. And that's been something that I've been working on even now, is trying to let my winners ride and cut the losers quickly. That's the key. People talk all the time about how you don't have to be right all the time with trading. It's more about risk management. You do have to be right some of the time, but it's just as much about risk management, because if your winners are big and you cut your losers when they're small and you don't let them turn into big losers, That's the key right there. I mean, you can only win 50% of the time, just like flipping a coin. But if you let your winners ride longer and they become bigger, and you let your losers be cut short quickly, you're going to be profitable. So you don't have to have a 90% win rate. Excuse me. It helps to have a 90% win rate, but you don't have to. For me personally, I just loved the idea of trading because, like flipping that house, for instance, I made $27,000 flipping that house, and that's awesome. But when you think about the amount of work that went into that and the amount of risk of buying a property, and then you're putting, 15,000 or so, I did anyway, of my money into that, you've got a lot on the line. And if you don't do it right, you're going to sit there and own a house that you can't sell for a profit, and you could lose money, or the market could turn against you. Like right now, the coronavirus has really hurt almost every aspect of the American economy. So, if I bought that house at the wrong time and put all this money into it, and all of a sudden I can't get out of it, and people are looking to buy lower than what they were, then I'm sitting on this huge investment that I can't get out of without taking a loss. So for me, making that money on that house was awesome. And all the businesses I've looked at and things, there's some great opportunities. But ultimately for me, it came down to, why do all that when I could just learn to trade? If I can learn to trade and be successful, and I personally know a lot of successful traders that do make, a lot of money. I know traders that make six figures. I know traders that have made seven figures. So knowing that that exists, and knowing that there's no difference between them and me, I can do the same thing as they can do. I just have to learn how to do it. I have to hone in on that craft and get good at it. But to me, if I can do that, it's so much better in every way than it is. If you're flipping a house, for instance, which is something I did and was profitable on, so it's a good example to me. There's so much that goes into that. You've got to find the right house, which means looking at 100 different houses. You're calling realtors, and you're spending all this time trying to find the right property, and then you're trying to outbid a bunch of people that are doing the same thing you're doing because they're trying to flip that house. And then if you get it, you're waiting 30 days while the house is in escrow before you get the house closed, and then the house is yours. But you've done all these estimates and things and prices on trying to figure out what fixtures you're going to change, and the paint of the house, and the colors, and the carpet, and like all this different stuff you have to figure out and price, and then put that into your budget to see where you're going to be. And then inevitably you go over budget, because that's what happens almost every time somebody flips a house. So you have to figure all these different things in, wait, all this time for the house to close. Then you take the house over and you start the work. Now, if you do it yourself, you have a ton of work like I did, where you're actually doing all the work. You're painting all those walls, you're taking all the trim off, you're stripping the floors out and refinishing them, or putting carpet in. You're lining up the subs, the contractors, for things that you don't know how or don't want to do. Then you're getting it all done, and you're putting it on the market, and then you're paying a realtor a percentage. There's just so much that goes into that when I think about that, I can't help but think, wouldn't it just be easier and better to master trading and be able to sit here in my office, or anywhere for that matter? That's what I love about trading. I could go on vacation, take my laptop, or I can sit on the couch with my laptop. I can come in here in my office, which is what I usually do because I want to be focused on it. But you could trade from your laptop anywhere. It just seems like such a better thing to me, that if I can just master this trading, I would much rather sit here in my office, wake up in the morning, sit here in my office and place trades, than I would take the risk and the time that is involved in buying a small business and starting that up, and you're managing people and dealing with customer service, and or buying a house and all the stuff that goes into flipping it. It just becomes so much compared to learning a skill that I can do from my computer. That, to me, there's nothing better than that. And if you don't feel that way, you definitely should not be trading. If you like interacting with people and you like the customer service aspect or all these things that go into having a business, then do that. But if you are like me and you like the idea of just being able to sit in your office and make money, to me, there's nothing better than that. I absolutely love the feeling of clicking the button and, placing a trade and then getting out of that trade and seeing up at the top of my screen realized profit of, even if it's only $50, sometimes only $20. That still excites me because it's like, I just made $20 sitting here at my computer in my office, and that's awesome. I'm sitting here just enjoying my day with my kids playing in the other room and clicking a mouse and making $20 or $50 or $100 or $1,000. Just the only difference between making a small amount and making a large amount is scalability. Once you get good and you get your patterns down and you know what you're doing, then it's just about scaling up. You take your 100 share size, you do the exact same thing with 1,000 shares, and then at some point you do it with 5,000 shares. And that's the only difference. You do the same pattern, the same thing, you just scale up. Anyway, that's kind of my take on why I got into trading and the reason that I'm trading now and trying to, to this day, master trading is there's just nothing better than that in my mind. I will tell you that trading is definitely a long process. I've seen the videos on YouTube about how I learned to trade in a week. That guy that's promoted his thing all over YouTube, how I learned to trade in a week. You've probably seen it. No, you didn't learn how to trade. You might have learned how to place a trade in a week. I can teach anybody how to place a trade in a day, in an hour. Watch my video that I made about how to trade with Etrade, and you can see that you can learn how to trade in no time. You can open an account and be trading. That's not hard, but that's not learning how to trade consistently and profitably. To learn how to trade consistently and profitably, you have to have a ton of experience in the chair, screen time as they call it. There's no way around that. And anybody that tells you any different is wrong, because ultimately you will lose money. If you try to trade in a week or, even a month, can you make money? Sure, you can definitely make money. But over time, the market's going to take your money unless you're extreme outlier. Is it possible? Yeah, there are extreme outliers out there that, the Tim Gritanis of the world that master it pretty quickly. And if you're super disciplined, you're smart enough to see the patterns and recognize it all, and then you're really, really disciplined, yeah, you could do it in a short amount of time. But for the vast majority of people like myself, it's going to take years. I've been doing it for over 3 years, and it just got to the point now where I started, being disciplined enough. I think a lot of it really is discipline, keeping your emotions in check and being disciplined enough to cut the losses and to see when the loss is occurring and get out of it. There's no substitute for that, because you just don't know how to read the markets until you've sat there in front of the computer for thousands of hours watching the stocks and place trades and put your hand on the stove and got burned. That's an analogy a lot of people use, and it's true. After you get burned so many times, you start realizing that, hey, I don't want to put my hand on that stove. And that's what trading is like. You don't know what the stock's going to do until you've done it a bunch of times and had your hands burned on the stove. And that's why it's really important to start trading with a small amount of money that you can afford to lose. You should always start trading with an amount of money that you have no problem losing. It's not money you need for rent or for bills. It's money that can be gone, no big deal. So most likely it will be gone, and you need to know that. But it's just something that you have to learn from experience. And to me, the secret to day trading is really only a couple of things. One, it's studying and learning about the market to where you can kind of understand what's going on. Two, it's experience that comes from screen time and watching the markets and placing small trades and learning how it's going to react over and over and over and over again for, hundreds and thousands of hours. 3, it is pattern recognition and only having your play. Like you come up with your strategy and your setup that you're looking for, and you only do that. And when you've mastered that, then you add another one, and then you have 2, and you only do those 2 setups. And then the next thing would be discipline, which is the discipline of only doing those setups. And that is very tricky because, there's a lot of days that I don't trade, that I watch the market all day and I don't see the setup I'm looking for and I don't trade. And that came from, that was something I just got good at in the last year because you get so bored. You can't help it. You get bored. You want to do something. You want to trade something. You want to make something happen. You want to make money. And a lot of the times your setup's not there. So then you're doing something that you're not really comfortable in and you're not an expert in. And that's when you lose money. And I find myself doing that even now where I'm only looking for that one specific setup. And then I'm looking at something like, this is going to be a good dip buy, and I have to physically tell myself I get sucked into it. It's almost like, like a drug. It sucks you in, and I have to tell myself, whoa, that's not what we do. That's not the way that I've got to where I can consistently make money. It's not by that pattern. Someday I can add that pattern, but right now, that's not something that's working for me, and I have to make myself step away from the computer. Step back. Don't place the trade. Because it's so easy to click that button and think, it's going to make money. And the next thing you know, you lose money and you're sitting there thinking, well, why did I do that? Well, the discipline is very difficult to overcome and to stick to your guns, only do the setups that you know are your bread and butter, the stuff that you've proven makes money. So that would be the next thing. Then I would say... That's really what it comes down to. It's those 4 things. If you can stay disciplined and stick to your patterns, and then the next thing when you can add more patterns at that point. But other than that's really what it comes down to. And it seems so simple, but it's not. It just takes a lot of time to master those things. There's no way around it. I'll jump over to the market and talk about some stuff going on here and like support and resistance and things like that. Here's a good example. Man, I wish I wasn't making this video. I would have probably taken that trade. So the pattern that I trade almost all the time now, the one that I'm always looking for is a breakout. So what a breakout would be here's high of day right here. 625. So then whenever you pass that level over here, that's where you want to be buying. Why does this work? Okay, this works because there's a ton of people like me that are going to buy the breakout. But it's not just that. That's only half the equation. There's also a ton of short sellers, which I've done quite a bit of shorting as well. And you're looking to short at high of day because that's where the resistance is. All resistance and support is a psychological place that people are going to be buying or selling. It's just a psychological thing. And, people create, it's a self-fulfilling thing. People create the resistance and the support because you'd be looking at this, it's high of day. Well, that means a lot of people are going to be buying if it breaks that. And then if you got a lot of short sellers love to short at the high of day because they're thinking it could hit that resistance and then come down. So you're going to have a lot of shorts. Well, when it breaks that, you got people like me that are buying the breakout, and then you have short sellers that are going to panic and have to buy to cover. They got to cover their positions. When you cover a position, you're buying the stock. So between all the people that are looking to go long at the breakout and the short sellers having to cover, you can have a nice big move up. And if you look at that, the breakout was at 625 and it went all the way to 784 before the first pullback. Now, this is also important because when you're taking trades, it's all about support and resistance. I mean, really, you're looking for those psychological places to get out. That's where you're looking for your entries. That's where you're looking to be taking profits. All the things that traders do revolve around that psychological resistance and support. So why did the stock stop here at 784? I'm willing to bet that if we look at a bigger timeline, we're going to find the answer to that. So right now we're on the 1 minute for today, 1 minute time frame today. If we go to the daily, all right, we're going to click on daily. It's going to default to 100 days. This is the stock, by the way, that one of the ones that everybody's trading today. It's got 16 million shares traded. So for one thing, we can see I've got the 200 moving average on this screen. Where's it at right now? It's hitting that 200 moving average and bouncing off. So that's a good case for why I use the 200 moving average and not very many other indicators other than VWAP. And that's why I see stocks reacting to it quite a bit. Why is the stock stopping right here and hitting that resistance? Because of that 200 moving average, and because right here, what do we have? We have the top of this candle, which is 784, and I told you 784 was key. Look at that. The top of this candle and the high of day on this candle are both in that 784 range. Then you also have a little bit of consolidation here. So, like I said, support and resistance is just a psychological thing. So as the stock's going up, like it was here, everybody is looking at the high of day, first of all, as a possible resistance point that could get rejected. When that breaks, then everybody, like me that bought that at that breakout level, is going to be thinking, all right, where is it going to stop? Where do I want to take profit so I don't get, you don't want it to pull back and lose your money that you just made. So everybody, when they buy the breakout, is going to start looking for the point in the stock where it might get stopped. Where's the resistance going to be that it might pull back at? So if you look right there, 784 is exactly where it stopped. Now, why is that? It's because everybody like me that's buying the breakout, and shorts also, are looking at the daily chart and they're trying to see, all right, where's the next point of resistance? If we were breaking out at 625, okay, you're going to look back here and see that it broke past that. So we've cleared that level of this candle. Now we're up here, okay. This candle here is around the 620 area, which is where the high of day was on today's candle. And so that would have been a little bit of resistance. And then when it breaks that and it goes up, people are thinking, all right, where might it stop at? Where could it? So you get to that level where these two candles topped out at, this one and this one, both topped out at around that $7 range, which is a whole dollar amount. Remember, I've talked about in other videos about how half and whole dollars can be support and resistance in themselves. It's just a psychological thing that, I want to take my profit before it's 7, so I might take it at 6.99, right around there, get out, because that could be resistance. And when it made it past that, they're looking at the next level. Okay, where's the next level at? Oh, 762. It makes it past that. Okay, where's the next level? Here's the top of this candle. That's 784, exactly 784. And then this one here is same way. So it just becomes a guessing game as to what is going to be support and resistance. And it's just an educated guess by looking at the market and looking at the previous days and seeing where other days highs were and where other days closed at or opened at. So you're just looking for those levels of resistance, and that's where you're going to be taking profit. And it becomes a self-fulfilling prophecy, because when there's thousands of traders trading this stock and everybody sees it, a couple of these different days it topped out around that 784, and then what happens is the stock, when it gets overextended like this, because it's been going up, past the breakout, it goes all the way up from that 625 all the way up to 784. People are thinking, okay, this is a little bit overbought, it needs to pull back, and so they're looking for a place where people might be getting out. It's another place also that shorts will be piling in. Shorts are going to be hitting this thing every time there's a spot that they think it could be resistance. They're going to be shorting it. So between people selling and the shorts piling on, you get that pullback. And then as it starts to climb up, you're looking for it to pass this level here again. Is that going to be resistance, or is it going to blow through that? And we ended up getting a little bit of consolidation there. Now it's pulling back again. Looks to be the backside of this move, but you never know what could happen. Now you're going to be looking, people that are looking to dip buy it are going to be looking in this area here to dip buy, because it's pulled back to that area there. So you might see a little bit of a bounce there, because people like to buy the dip and the bounce where they think there's going to be support, which would be this area here, because it pulled back to here. They think this could be support. So you're going to probably see a green candle or two in this area here as people are trying to dip buy. And that's what you're seeing, exactly what I just said. It's, popping up a little bit. And then this is going to be a good indication of where the stock's going to go from here. This would tend to be the backside of the move, meaning that, the stock has turned and it pulled back more than I would like to see. I wouldn't be buying this. You could buy it as a really quick dip buy scalp, but it's going to have some pretty amazing strength to get back up and make new highs, because it pulled back a little too far. So for me, it's not a buy, because I don't, I've tried that in the past and been burned on it many times. So it's not something I'd be looking to do. I'm more looking for the breakout. It's pretty much the only pattern I'm playing right now, is looking for the breakout. And if I wasn't making this video, I would have definitely been buying this breakout on SGBX. So anyway, it's got volume, and it broke past the high of day, looked pretty strong, but now it's pulled back almost a little too far to where, it'd be shocking. It could happen, and I've seen it happen, but it'd be shocking if all of a sudden this, made it all the way past and made a new high of day. Most likely you're going to see a bounce, a little bit of a head and shoulders pattern here, and probably pull back to around the high of day, previous high of day back here in the 620s would be my guess. And then it may keep fading, or it may continue up from there, but only time will tell. Let's see. VVUS was a really big play today. Tons of traders traded that. It's got almost 51 million shares of volume. Huge gap up from down here. I mean, this thing was trading at $1 yesterday. That's crazy. This is the reason why I love the stock market, and people want to know what's possible with the stock market and why I fell in love with it. It's just because of, like I just said, it's the possibility. That's why I fell in love with the stock market. If you bought the stock down here at $1, I mean, it's pulled back a lot, and you'd still be looking at, 3 times your money. That's crazy. Where else can that happen? If you flip a house, or you build websites, or you buy a business, or whatever, where else are you going to get 246% return in a day? And the answer is nowhere. I mean, it's almost unheard of in any scenario except for the stock market. And that's why I like these momentum penny stocks, as people call them, is because of that. They have this crazy momentum, these low float stocks. I've got my low float scanner over here, and these are both things that are on my low float scanner. SGBX is right there, and then that VVUS right there. So that's why I love it. All you need in the stock market, you need to have your broker. You need to study a ton and know what's going on, get a ton of screen time to kind of understand where stocks are going to be. But really, it's just a matter of support and resistance and understanding that, and then looking for your pattern and having a decent scanner, either here or one of the free scanners I mentioned in my other videos. Just finding the stocks that people are trading, and then looking for your entry point on your pattern. And that's really all it comes down to. Oh, this was one I was going to show you guys. I might make a video about this. This was the biggest loss I ever took. I might make a detailed video about that at some point. But I was basically shorting this stock in here. It's a good example of why holding and hoping does not work, and being outside your comfort zone. I didn't really know what I was doing shorting. I was just, I think I was actually shorting on this first huge day right here because the news didn't seem like it was that great of news on this pharmaceutical company. And so I was shorting it thinking it was going to come back down and I was going to cover at the 200. And it ended up coming back down. I covered some of my position pretty much. I think I had like 750 shares of this at like $25 or something. And I ended up, as it kept going up, I would cover it, but I kept holding it thinking I'll just keep adding to my short position when it gets higher, and eventually it'll come down and I'll make all my money back. No big deal. Well, the problem was it kept going up, and I don't know if insiders knew it or what it was that it kept climbing, but it ended up, the company got bought out. I think I was in this stock for a couple hundred shares at that point. Luckily, if I was in it for the full 750 shares that I took on that day, it would have been a $20,000 loss, but still, biggest loss I've ever had. I was holding this, waiting for it to go back down, and this is why I don't hold stocks overnight. Ever since this happened to me, I've almost never held a stock overnight. So PDT, no PDT, whatever, I don't even care, just because the risk is too great. And what happened was I was short, and the company got bought out, and they announced it after hours. So in the morning, I woke up to about a $9,000 or $10,000 loss. I think it came down a little bit, and I ended up covering for just under $9,000 loss. And at the time, I want to say my account was only around 20,000 in this E-Trade account. So I basically lost half my account on one trade because I held it overnight and the company got bought out. Something that I could not foresee happening. I had no way of knowing that was going to happen. You just literally wake up to the worst luck ever. Oh, look, the stock. Of course, there's times here that I could have said, hey, I should not be holding this thing. I should be getting out of it. And that's the difference between now and then, is that this was about a year ago and I wasn't good at cutting losses. Whereas now, if I'm in the stock and I have a loss, within a couple minutes, I just cut the stock and get out of it, because I figure it's better to be safe than sorry, and I don't want to find myself on another losing end. And that's what kept happening to me the first couple years of trading, over and over and over again. I would have a stock, it would go against me, and I would hold it and hope that it would come back, and sometimes it would, and then that just reinforces your bad habit and you do it more often. Sometimes it wouldn't, and I'd take big losses and I'd wipe out days of gains with one big $2,000 loss, $3,000 loss, $1,000 loss, whatever. Would wipe out my gains of 2 or 3 days. And I just kept doing that and burning my hand on that stove over and over and over again. I don't even know how many times, 100 times. It just took me way too long to realize that just cut the loss. Just get out of it. You lose it. If you're under PDT and you lose a day trade, so what? It's much better to lose a day trade than half your account like I did on this one stock. I mean, that was kind of the breaking point for me, where it was a while before I even traded. I quit trading for a while because I was so distraught over that. It just destroyed me. When you've been doing something for, at that point, like 2 years, and you wake up and overnight you lost $9,000 and half your account's gone just because the company got bought out, you really start to reevaluate where you're at. Like, why am I doing this? I'm not making any money. I've lost money. The whole time I've been trading, I've been losing money. Now I just lost half my account because the company got bought out. It's just a very hard reality check, I guess, as to what you're doing. And yeah, it destroyed me as far as my confidence and stuff. I didn't trade for a long time, probably a couple months, I would say. I didn't trade at all. And that's another key to being a successful trader, is confidence. If you don't have confidence, look at that. It's doing what I didn't think it would do, but it sure is. It must have a lot of shorts trapped. because it actually bounced there, and now it's making new highs. That's awesome. Showing a lot of strength. This is the kind of stock when it's like that, when it's showing a lot of strength like that, being able to come back from this big pullback and make a new high. Sometimes, not all the time, but sometimes these will be the stocks that really run after hours, because if it's a low floater and it's got good news and it closes strong, we still got 23 minutes till close, but if it closes like that, it can really go crazy after hours. You get a bigger spread after hours, and people really hit that ask, and it just keeps going and going. Sometimes some of the biggest moves, but as you see there, we broke through that 200. It's all the way over $9 now. I mean, that's crazy. Next psychological resistance point here would be about 1043 area. So if it can get there, we might see it hit 1043 and stop. Could go $11. Looks like $11. Must have a lot of shorts trapped. They're backed out. Look at the 200-day just to see where all the resistance points are. Looks like it's going to come into a lot of, anybody that was holding the stock long term from there might be looking to get out. Anyway, it's pretty cool. Just shows you what's possible. The stock was down here at $2 this morning. I mean, it's just mind-boggling. If you look at the stock, was trading down here at $2 and under $2 yesterday, and now here we are hitting $9. That is just crazy, guys. That's why I love the stock market and what's possible, and it's like a drug to me, because it's just amazing to me that it could go all the way to $9 from $2 the day before. So imagine if you were lucky enough to be kind of like how I was unlucky enough to be on the wrong side of that short position last year and lose $9,000. If you were lucky enough that you thought, hey, I like SGBX for a move up, and you happened to buy it yesterday, and somehow you held it this entire time, which is very unlikely because most people would have got out of it into one of these spikes. They wouldn't have held through this huge dip, cup and handle type chart, and hold all the way up here. But if you did, just to show you what's possible is what's amazing. Let's say you only had a $2,000 account, and you bought it yesterday for $1.97. You had 1,015 shares, and you somehow magically held it all the way till the top of today, which you wouldn't. But if you did, I would hope you wouldn't anyway. You're talking about $9,000 on a $2,000 account. It's just insane, guys. It's insane. $7,000 profit on just a $2,000 account in one day. The stuff that's possible with the stock market is why I love it. It's not likely. It's not probable. You're probably not going to find yourself ever making a gain like that because it's so hard to hold it. If you're in that position, you'd be looking at even double your money in this $4 range, and it'd be really hard to not get out. But still, double your money would be an insane gain. It'd be awesome. But if you did by some miracle, usually the only way this would happen is if you weren't paying attention and you just checked the market later in the day and, oh, look, it's at $9. But if you were lucky enough that actually happened, yeah, you'd be pretty excited. The stuff that's possible in the stock market is just unlike anything else, and that's why I love it. And it is very risky, and if you don't know what you're doing, you can and will lose a lot of money. And it's really important, like I said, about buying the breakout. I buy the breakout, and a lot of people do that. But you got to be careful because there's a fine line between buying a breakout and chasing. If you haven't heard people talk about chasing, you can definitely get burned chasing. If you're the guy that you don't buy the breakout, let's say right here this morning, if you were trying to buy the breakout, you might have been okay. It got halted and then it opened up high. But if you were the guy that saw the halt and saw this green candle and you start buying up here, Okay, now you're chasing it and it drops all the way back, and you're looking at a pretty hefty loss because it dropped back $2 from the 6 area down to the 4 area. So it's important, guys, to know what you're doing and to trade very small, because until you're experienced, until you really know what you're doing and you're comfortable with the market and you can kind of read what's going to happen, you have to trade small, because you're inevitably going to be on the wrong side of this. You're going to end up chasing it thinking it's going higher and lose $2 a share or $1 a share, which is a lot if you're not trading with really small size. So the best advice I can ever give to any trader is to trade very scared and trade with very small size. Always be looking, over your shoulder for what could happen. Always be fearful of the possibility that it's going to have a big drop, and always trading with small size until you start to learn how to read the market. It's going higher even now, it looks like. Yep, there it goes. See how as soon as it breaks that 913 area, shorts start covering, people are buying it. But even there, I mean, it's looking, to me, I wouldn't be buying it at this point. I like to buy the breakout down here, where it's breaking out past this high. After it's taken time to curl up, you're going to get a lot of people piling on. And then you see it come back, and it doesn't go that much higher. And it comes back, and it did go considerably higher there, but it just feels too much like chasing to me to be buying the stock up here. Could it go higher from here? Sure, it could. But like I said, you want to trade scared and trade with the odds in your favor. And the odds to me are this starting to look a little bit toppy. You start getting some longer wicks on the top. That means that it's looking to pull back possibly. And you never know. The thing about the stock market is it is somewhat gambling, just because you never know. But it's also something that you can master, and you can trade in a way to minimize your risk. To me, this would be chasing. That's why I wouldn't be taking this trade right here. You could have possibly taken the breakout right here. This would be a spot where you could take the breakout at 842 as it curled all the way back up and then broke past that high of day right there. You could have taken that trade, but I would have been, if it was me, I definitely would have been getting out before it hit $9. I would have just taken that 50 cents or so profit and moved on. What's going to happen here? I don't know. It's getting into close, and that can be a real wild card because we're only 15 minutes or so from close. So that's when you'll see a lot of big moves up or down on a stock like this that's got a lot of action all day, because people can be piling on. If they think it's going to continue tomorrow or into after hours, they'll start piling on into the close. And other people are looking to take profits because it gets to the end of the day and people don't want to hold it overnight. People like me that are, scared to hold things overnight are going to be looking to take profit. So it can go either way, because you're going to get a lot of people buying, a lot of people selling, shorts covering because they don't want to hold overnight. So you can get a pretty good move. One thing I will say, I've made a decent amount of money buying stocks like this if and only if they're closing at their high of day. So, if it gets to be 3 o'clock or 4 wherever you are, but 3 where I am in the Midwest, and the stock is still closing up at this high and strong, I've made quite a bit of money buying a momentum play that's a low floater that's closing really strong, because if it closes up at that high of day, a lot of times into after hours, you'll see you're not going to have as many shorts in after hours. So you'll see a lot more people hitting the ask. The spread will get bigger here. The difference between the ask and the bid will get larger. And you'll see people just tagging that ask over and over and over again. And it can really move up high. I've seen, a stock that climbed a couple 100% throughout the day, and it might climb a couple hundred more in after hours in a matter of, just a couple hours. So they can really get to moving after hours, but it's very volatile. So very, very much something I wouldn't recommend for people that are new to trading to trade after hours, because you can get stuck with the big spread can really get you stuck also. If it starts selling off and coming down, you can't get out of it. There's not, the liquidity is not there, and you have a lot bigger spread. So when you try to get out of it, you end up taking a bigger loss than what you would if it was trading during the day when there's a lot of volume. It just started to sell off there and pull back, but it's still pretty strong so far. We'll have to see what it does into close. But anyway, guys, I think I'm going to wrap it up. I just wanted to get some kind of content out there. Didn't have a real goal for a video to make today, but I wanted to make sure I made something so you guys had something to check out. I hope this helps. Like I said, leave comments. Tell me what you want me to make videos on. I can make a video about anything. So shoot me a message or a comment on something that you guys are struggling with, and I'll make a video about it. It can be, I can make a video just focusing on scanners, or just focusing on support and resistance, or patterns, or whatever it is, whatever you guys are struggling with. It's hard after a few years. It's been several years since I began trading, so it's hard to remember where my mindset was at that point and things that I didn't know. I made the video about how to set up Etrade because that was one that really stuck in my mind. I remember setting up the account, like getting an account at Etrade. My first account was with Etrade, and I remember scouring the internet trying to find how to set it up, because I was like, okay, cool, I got this brokerage account and I've downloaded the platform, but I have no idea how to actually set it up. Like, what do I do? Where do I put the chart? What do I, how do I know what stocks to trade and where to begin? And that's something that stuck in my mind, so I made a video about that just to kind of show people how to set up their Etrade platform. But anyway, we can talk about PDT. We can talk about a lot of different things. I'll try to plan out a video a little better. I just wanted to get some content out there so you guys have something to watch. Hopefully it helped. Until next time, like I said, shoot me a message if you got an idea on something that would be a good video, something that you guys are personally struggling with. I appreciate all the love and the comments and the likes and the subscriptions. That's awesome. Growing the Nomad Nation. I love it. Like and subscribe. Check it out. Until next time, let trading set you free. Nomad, peace.